Hi, Warriors. Good turnaround Tuesday, although turnaround Tuesday happened on Monday. How's everyone doing? Hello, Patrick. Tillin, how are you? Dennis Geekus, Mike Wagner. So this is a free room that pros come and hang out and look for some different ideas, it looks like. Thank you, everyone, for being here today. Okay, so Euro came off the return line. This was a return line. And yesterday I talked about 92.20 in the Dixie. So it looks like we're going to have another new low before we get a better rally. Here was the Dixie, talked about 92 to 92.20. So both return lines worked yesterday, came right off it yesterday. Okay, so looking for a new high in the Dixie. Maybe we'll go to 94. I think there's some longer term channel lines up there. So this is a weekly there. Yeah, it's going to come in. This is going to come in right around 94. Right there. Okay, so if we take it down 93.70-ish, okay. So maybe we get some type of turn after we make a new high in the dollar. What's interesting is the dollar's strong and the yen's even stronger. Finally made a new high for the move. Took out that double top. There we are. See, I was suspicious of this high because we never took out this high. So all the people that had hope, they're now taken out. I can't call this a third drive because this was not a new high over the first. So pretty good strength. But what's interesting is S&Ps are lower even with the yen strength. I know some guys that think we peaked yesterday up here at this 2740 level with an outside shot of 50. So be careful if you're long risk, which tells me that I might lose a Duke Brothers bet that I have with Jeff York. He uses pivots. He was looking for 69.90. So risk in equities looks like it might come back in here for a little risk. See what the shorter term time frames look like in the end. Getting some decent divergence between here and there. So I certainly could not be long the yen up here. But I want to see when the dollar makes a new high where the yen is at, because I think that's pretty much in the bag. I did want to show the Aussie though. Looks to me, we're not that far from a new high in the Dixie, that we might even put in a higher low. And doesn't this look like, you know, there is potential for a right shoulder or a higher low in the commodity currencies? Just something I'm observing here. Also did not get a third drive to a top in the metals, but you know, I've been pounding the table for quite some time that this 1300 is going to give way, that perhaps we head towards this 1286 level. That's looking more and more likely with a new high in the dollar coming. So that's it, King Dollar, everybody. And yesterday was a day to act off the return lines. And I can't advise what to do now. I can't chase the long side of the dollar here, even though there could be some more left, right? You know, I guess we could put in a failing rally here. It's possible that this could turn out to be ABC. But see, yesterday there was something to take action about. Right here, there isn't. So I actually thought what happened yesterday was going to happen today. So I guess turnaround Mondays, that there's always exceptions, and Monday ended up being a turning point day. So that's the way things look to me. So lines held here, lines held here. Oh, there is one thing to, you know, keep an eye on. You know, I was talking about buying a break in Euro pound right in this level. So you're wrong under this low, and I'm thinking maybe we get some type of flag here. Let's bring it out. Looks like around 70. So if you get an opportunity around 70, you try it, thinking it might be a continuation formation. We did get a confirmed high here, right? So there is a possibility for this to be a break to buy between here and 70. And if we turn up from here, it could look pretty good. So Euro could make a new low, and let's see, Euro pound has 1, has 2, and this might be the third higher low in Euro pound, with Euro making new low after new low after new low. And I think the next low in Euro, you're going to have all kinds of glaring non-confirmation. Sorry, I'm jumping all over the board here. I'm a rambling, gambling man, and I don't think that will confirm here. That's your 4 hour. I don't know, now that I've been hanging out with you guys for about 5 minutes, it almost feels like a shot to fade the dollar here. So I just don't have the same conviction level I did yesterday. Yesterday I had technical areas that meant something to me, and now it's kind of conjecture. So anyway, I hope at least gives you some things to think about, guys. And I know Blake was up late last night, but I know that he's a young, vital guy, and he might have some ideas. I'm wondering what you're thinking here in the dollar and euro, Blake, if you think the dollar has another high in it, or this might be a failing rally. What do you think?
Hey, Dale.
Hey, buddy.
You know, well, first of all, we got pretty important data coming out. So, you know, the whether we continue with the dollar or not probably has more to do with retail sales. So we got retail sales today, and that's probably going to be the most important thing. That's like I said, it's going to be, you know, make it or break it for the dollar for today, and then we have industrial production tomorrow and capacity utilization. Always makes me nervous when we see, you know, like the dollar yen. We had this big break above the 110 level. Matter of fact, Citibank, Citi Tech.
Yeah.
They just went long the dollar yen just moments ago, right at these levels. So,
what are they looking for? 112.80. I've heard that bandied about a little bit.
They are looking for 112. Matter of fact, they're looking for 112.20.
Okay.
7. So that's what they're looking for. And so you know, it's a little dangerous just before data, but you know, again, or I should probably say that U.S. economic data has been very strong. So, you know, it's as long as we can stay above 110, their stops are 109.95. So, or 109.45, excuse me. So, so anyway,
thanks for sharing that.
Yeah, they just initiated that. So as far as let's, you know, you were looking at the euro and you're looking at the dollar index. It is really difficult to be long the dollar if you missed it yesterday. And let me go ahead and.
Yeah, that's what you said it in 3 words. It took me 7 minutes to explain that.
It's no, but you know, but the euro dollar, you know, we had set up yesterday. We set up like an inverted head and shoulder pattern, and it looked like it was breaking. The neckline was here, but we slumped right back through the neckline yesterday afternoon. So, kind of, you know, it just negated that inverted head and shoulder pattern. But you know, I'm gonna take you over to a chart which you were talking about equities, and I'm gonna take you over to the Nasdaq. The Nasdaq set up a nice Gartley pattern. This is a Gartley, and we hit it yesterday, or you know, you can say that was a false breakout yesterday, right? Like right here.
Yeah.
Let me move the D because it's hard to see with this. I'll put it like that. Okay. So you can see that false breakout yesterday and reversal. So the stock market, it could very easily peak, whether you're looking at the NASDAQ or the S&P, and you're talking about the Duke bet, the $1, the $1 bet you got going on. Okay.
Yeah.
So yeah, I don't know. The market looks a little top heavy here. Now, I also have to mention that bonds are extremely weak and yields are strong. We've got the 10-year yield at 3.02. The market's not shaking at all with yields at 3% now. So, well, at least currencies aren't, are just reflecting, stronger yields, and that's why we have a stronger dollar. That's one of the reasons why the dollar yen just broke above the 110 level. But, will the markets care that we're back above 3%? And if they do, what do bonds do? Do bonds rally as a result? Do we see a rally in bonds and a drop in yields? And does the dollar respond to that? I think that's the question right now. But we won't really know that until after the data and after the stock market opens. But that's something that I think we've got to be a little cognizant of. I think the stock market looks, after having such a massive run, we have to understand, and I've mentioned this last week, and we got here faster than I thought we were going to get. We are in the month of May, so we're at a time where typically the stock market sees a little profit taking anyway. So if yields are above 3%, does that weigh on the stock market up here? And I would think it might. So I think you just got to be a little careful with what you're doing with the dollar, because if we get a little bit of risk aversion, this dollar yen could actually roll right back over. Because you look at some of these yen pairs, and I don't want to go through them too much because I don't want to take away from what Steve has to say, but the yen pairs are all looking like they're heavy. The New Zealand yen looks like it's really going to break down. So I think we got to pay close attention to them. Now, as far as the euro goes, this is not a clear picture by any stretch of the means. Yesterday, it looked like a decent long until we broke back below like 119, 40, 50 level. Okay, so the euro dollar, like I said, it's unclear at this point. I don't necessarily want to be short, not after a 120, 130 pip move lower. I don't know if this is the right place to be long because we're back below the 618 retracement. So I think we have to take our cues a little bit from economic data at this stage in the game. The cable, surprisingly, the cable's been very quiet. I don't advocate being long. I still would rather be short at 137, but we haven't had that opportunity. But we haven't broke down. I mean, the euro dollar has broken lower, pretty aggressively. I mean, you look at the euro, the drop that we've seen in the euro from 120 all the way down to 118, wherever we're at, 118.80. The cable reciprocated, and we did fall a little bit, but not too much. I'm surprised that the cable isn't at new lows. The Aussie is just, actually the Aussie is just more or less consolidating. I'm surprised the Aussie hasn't broken lower. Okay, which, if you're short the Aussie, you're probably going, why, with all this dollar strength, why isn't the Aussie, just completely, buckled and broke underneath the support yet? I mean, I would be wondering that. We could set up, and this is all very early. I hate doing this ahead of, ahead of data and being too early on things like this, but we could very easily set up an inverted head and shoulder pattern here. We could. If the Aussie dollar decides it wants to reverse, we can head right back up to challenge the underside of this trend line. The Kiwi is trading heavy. And you can see that through the Aussie, New Zealand. Obviously, the Kiwi is heavy, but the Kiwi still, very much range bound. I don't know if I'd necessarily want to be short the Kiwi here. Yesterday was the place to be short the Kiwi, which I wasn't, but that is the place, close to 70 cents. I don't know if I want to be short as we're near channel support. And this dollar Canadian is extremely volatile. We've had a false breakout to the upside. We've had a false breakout to the downside. And again, I think you gotta let the NAFTA negotiations take hold and take place before you can, make any decisions here. Also keep in mind, like the Fed's Kaplan speaking this morning. We have a ton of Fed governors speaking this whole week. A ton of them. Matter of fact, we have a couple Fed nominees that are speaking today on monetary policy. So I think it's the nominees for the vice chair's seat, if I'm not mistaken. But we've got a lot of potential headwinds or volatility created by that as well. Let's take a look at the Swissy. So the Swissy, I really want to buy this one, the dollar Swiss. I haven't seen a deep enough correction in the dollar Swiss to be long, but I don't want to be shorted either. I've shorted it a couple of times last week as we were up near current levels, and I think I've actually made money being short the dollar Swiss. Not too much, but a few pips here and there. But I'd rather be a buyer at 98.50 than a buyer right at current levels. If we break out, that's a different story. But right now, the dollar Swiss is still holding below this 1.0050. I don't know if I want to be short. I don't think I want to be long, so I'm just kind of leaving this one alone. The U.S. dollar Mexican peso. This is something that I think we should all be paying pretty close attention to, because we had a AB equals CD completion, or pretty damn close. All right, and this is again ahead of these NAFTA negotiations, and we have Mexican president elections, which I'm not super up to speed on, which I should be more up to speed on, which Stelios, as a matter of fact, if you want to read a little bit about it, we could go to, the US dollar Mexican peso and go over to macro. And then I know Stelios has talked about NAFTA and I think he mentioned something about the presidential elections here.
I didn't actually. We talked about it in the webinar yesterday a little bit.
Oh, you did? Okay, I wasn't sure if you mentioned it on the webinar or. Okay, so what's your take here, Stelios, if you got a moment?
Yeah, sure. I mean, we talked about it yesterday. Actually, said something which wasn't completely accurate, so I corrected it with the help of a few friends of the webinar yesterday. But basically, it looks like the first. Although the polls are showing, I can't remember his name, he was the ex-mayor of Mexico City, so he's apparently ahead by 20 points or something like that. But although the polls are showing him quite a fair bit ahead, and he's a leftist, by the way, it seems that this is going to be very volatile. So things could really change from now until the elections. And then the peso is probably, jiggling around quite a bit because of all this. It's just something that needs to be watched quite carefully, and I'm gonna do a little bit of more research on this and post something on the macro side today. So. Oh,
great. Okay. Well, I think it is adding to volatility here, and then on top of it, technically, it doesn't. It's far from clean, other than. We might have completed an ABCD. We have divergent relative strength. I sure as hell wouldn't want to be long. I don't think I want to be short. So, I think waiting for the NAFTA negotiations is probably the better thing to do, is waiting for those to be complete, or get some headlines there rather than trying to trying to get ahead of the move. I don't, because I think that the charts are about as clear as mud right now. So you know what I mean?
Yeah, yeah.
And by the way, that we are seeing some Canadian volatility right now. I think that crude oil just pressed into new highs, and the dollar Canadian has just slumped. Look at us give back all of our games here. Dow Jones NAFTA agreement on auto is not as complicated as other key topics. That's Mexico's Gajardo. So, and that's actually positive Canadian and positive the peso. But again, the peso is probably marred a little bit with this. With the election comments, so election murkiness, if you will. But you see the Canadian is actually slumped as a result. We've seen the U.S. dollar Canadian come off, and that's fairly aggressive. I mean, look at the hourly charts, you know, and pretty aggressive move lower in the dollar Canadian. I think we need to watch that rather carefully. All right, thank you, Stelios. The U.S. dollar Norwegian krona, very messy as well. U.S. dollar Swedish krona. Now, the U.S. dollar Swedish krona, by the way, this has had a really nice bounce. This is what, if you look back to what we were expecting, you know, back here, looking for a move back down towards the breakout point, we basically got that move. We didn't quite hit 853. We hit 856 before we started bouncing. But this will accentuate how important this trend line here is as far as the U.S. dollar Swedish krona goes. You know what? Let's take a look at the dollar yen. We do have, now keep in mind, we have retail sales coming out here in the next 8 minutes. We had a bullish break in this U.S. dollar Japanese yen. We are almost dipping back below 110. Remember, Citigroup just went long dollar yen. Their stops are at 109.45, so that means their stops, they're looking at the chart exactly the same way that we are. I'm telling you right now, you know, even though it's Citigroup and I'm not there at their desk, I can tell you they're looking at this chart exactly the same way. They're looking at this as a bullish wedge breakout, and they're long. Stops are below this trend line right now. So if they're long, I'd imagine a lot of other people are long as well. So we've got to watch this trend line. If we come back below 109.50, that's probably going to spur some, you know, reversal activity in the dollar yen. Yields have come off a little bit too. Here's bonds. You can see this is a 4 hour. So let's go over to the hourly. This is the bond market. You know, we have bonds selling off. That means yields have been going up. Now we've just seen a bit of a bounce in the bond market. Yields are coming down. As yields come down, the dollar yen's come off just a little bit as well. So
like that wedge that you had drawn last week, it probably just made one more trip down, like we talked about.
Yeah, not quite. Yeah, we're right.
Oh,
we're
okay,
right there.
yeah.
We're right there.
Okay.
We're right at trend lows. So,
Okay.
yeah, I mean, you know, a bounce in the bond market from current levels would be, you know, basically we'd be respecting the lows, and you know, we could still set up for a reversal if that's the case. So
I'd like to see one more low there, buddy. And yeah. I think Jim Welch is looking for, he's a pretty good bond timer, and he's looking to buy TLT at new lows. I think I sent you his research yesterday. So
you did. Unfortunately, I was at my son's playoff game yesterday, so I didn't get an opportunity to read anything. So. Anyway,
he's with you, you know, looking for a bond rally after we make new lows.
A new low, which
yeah.
You know, I mean, you know, we could match the low and then reverse. It's possible, but again, I think it's more data related versus technically, you know, like it's hard to forecast knowing there's such important economic data that's feeding into GDP here in the next 2 days. But you know, I think that's something to pay attention to. Let's take a real quick look at the dollar index. So the dollar index, we just rallied basically to the 618 retracement. We're stalling here at the 618. We were just above it slightly. This is the 4 hour chart. Like I said, the dollar is not very clear at this moment. you know, whether we're talking about the euro dollar or the dollar index, which, you know, are obviously just inverse of each other, basically. It's not very clear. I don't know how comfortable I'd be buying dollars. I don't know how comfortable I'd be really selling dollars either, because the dollar has had a really nice recovery. We also have to realize that gold and silver are near some pretty key supports down here too, which have been respected. So I think we should, you know, just watch this data that comes out here in the next few minutes. And as a matter of fact, I'm going to ask Steve if he's here and see if he has any final comments before I go before this data. Good morning, Steve.
Hey, Blake. Good morning.
Hey, good morning. So we've got the dollar has had a nice recovery, but how do you feel about the dollar this morning ahead of data? I mean, you know, we just hit the 618. The dollar looked like it was pushing the envelope ahead of data. How do you feel here?
To be honest, you know, I wouldn't be surprised if we get at least one more leg lower from here. But even if we push to new highs, I would still be looking for a deeper pullback rather soon before looking for you know, more dollar strength. So in essence, I would be quite skeptical in being long the dollar in the short term. I would definitely, to participate in this, I would definitely need to see, you know, a deeper retracement, either directly from here or from a new high. So that's my general viewpoint.
Yeah, and if you look at, I mean, if you look at the dollar, speaking of, you know, shallow, I mean, we barely even pulled back. You know, we haven't even pulled back 30% of this move. To see the dollar index trade back below 92 for me would be a better place for me to be on the long side of the dollar. I have a very hard time buying something that's such a shallow retracement, you know. And if the dollar, but I have to also add on top of that, if the dollar does break into new highs from where we currently stand, if we start hitting new highs, that's going to be extremely bullish, because that means the pullbacks have been extremely shallow, which means the dollar's probably got a lot further to go. I just I don't know how much I'm sold on that idea just yet. So, all right, good. We're probably close to on the same page. I'm going to have to switch it over to you because we do have retail sales coming out in about 2 minutes.
Absolutely.
And so, and I want to mention our sponsors, Forest Park FX. Make sure you guys, you know, get in touch with them with any of your broker needs. They do sponsor this webinar. They make this webinar possible for you guys. And there's Steve going over to the reimbursement program. So.
This is the reimbursement program. You can contact them, you know, from here, even if you are not ForexAnalytix subscribers. There's a different link for U.S. residents and a different one for non-U.S. residents. There is a Skype somewhere here in the bottom. You can find both an email you can use to contact them, and you can also find a Skype contact. They are always available to you for more information. And keep in mind, if you're a ForexAnalytix subscriber, you can benefit by even having your subscription for free, depending on the trading volumes, etc.
Yeah. I sent a few guys to Trent yesterday, Blake, that were asking about where to trade. So
awesome. All right, guys. Hey, a minute before retail sales, got to go. Thanks, guys.
all right. Good hunting.
Hey, Stelio.
Hello, I'm here. By the way, I just wanted to say that, you know, recently US data has not been on the strong side. So, you know, if you ask me, chances are for a slight disappointment. Obviously, you never know. So what are we expecting?
USD yen, you know, #1 candidate to watch for a breakout or a breakdown. Today was testing the 200 DMA. It's still holding. I said yesterday that I thought that a break to the upside is very likely given the nature of this short-term correction that we had, which was in time more or less like a triangle or a pennant or a, you know, no matter how you see it, it was a consolidation. So if we do see strong retail sales, I expect that, we might come up today and test the 61.8 of the move low.
Empire State beat, but retail sales was slightly weaker, 0.1 weaker on retail sales, 0.2 weaker on core retail sales. So, overall, I think it's not great numbers. I don't know what the market's saying.
Retail sales control group 0.4 versus 0.4. US April retail sales rise 0.3. Ex-autos up 0.3 month on month. We do see the dollar being beat at the moment, though we're still near the highs of the day.
Revision on retail sales was higher. So slightly lower headline number, slightly higher revision, and you got the stronger than expected Empire State Manufacturing Index. So overall,
not bad at all. Yeah,
not too terrible actually. Look at the revisions. That's the main thing. Everything was revised higher. So.
Okay, so that definitely plays a role for the market, and as we see, so far the market is beating dollar, USD yen back on the 200 EMA. As I said, next target is the 61.8, just below 111. We are obviously seeing. We had a spectacular failure yesterday for the Euro USD from a psychological level from 120. Today we're seeing follow through to the downside. Obviously the next downside target, if we do break the new lows, is the 78.6 from the last move higher. That comes at 117.63. As you see on a daily closing basis, and that's why I mostly watch at daily closing, because then you can also determine what kind of a daily candle you have. We never managed to penetrate through this support resistance area, the one that we had indicated, the 119.30 area, and that is definitely a bearish development. So that keeps the Euro USD under pressure. I wouldn't be surprised, as I said before, when Blake asked me if we see one more low before we actually see more dollar weakness. The only thing we seem to disagree a little bit with Blake is that personally, I'm going to be looking for a new high in the dollar as an opportunity to sell for a deeper correction than actually to see continuation. I think that if we do see Euro USD print new lows, cable print new lows, a lot of people are going to be jumping on the dollar strength wagon, and perhaps that might prove to be a little bit premature in the short term, because as I said, I will then be looking to buy dollars, but after a deeper pullback, right? So that's my general trading plan. Now, the reason I have dollar up on my chart is because we've been seeing, this is the third consecutive day and seems the strongest one after we got that reversal last Friday with this shooting star. We got yesterday, it was a negative day. So far today, gold has been trading in a very weak fashion, and it's currently back testing the 1300 area. So coach, it seems that you might get your wish, getting the 1300 stops taken out of the market before we see what happens from here. One thing is for sure, this is a very important support area, and I bet that a lot of people are closely monitoring it. This is a confluence of supports. It's a 50% fib of the last move higher. It's a 200 DMA. It's also a horizontal support resistance area. So quite a critical level here for gold. On the other hand, silver is still some distance away from a very critical support area. So I don't predict that we're going to be getting any real developments happening there today. On the other hand, another failure from the 1000 level for palladium, quite a negative day today. So obviously palladium remains in what seems to be a consolidation here. The more it will consolidate around here, in my opinion, the higher the chances that it will produce one more leg to the downside. So I'm closely monitoring this, because I might even end up shorting it again before I actually go long. So let's also have a look at, Blake talked about it, but let's have a look at the Aussie and the Kiwi. Aussie, this is something important to note, came up, tested as resistance, the channel support it's failing from there, and that definitely keeps the Aussie bearish. And Kiwi finally made it down to our next target. So the question is, what happens from here? Obviously, if I zoom out, you can see how important this horizontal level is. If we do see like a weekly close below 68.5 cents roughly, I think that's going to be a very, very bearish signal. You can see this is an area of support that has been mostly holding since summer of 2016. So it's a 2-year support area of increased significance, and that's something to watch very closely. Obviously, any rebound we get from here, first area of resistance is going to be 69.70, and in general, as long as we remain below 71.8 cents, I think that maintaining somewhat of a bearish bias is appropriate. Now, a fast look at the S&P, because not much has changed. We saw yesterday a little reversal. Let's see if we're going to get any follow through. Still remains choppy. I would be closely monitoring this broken descending trend line. If we do see a retest and this trend line holding, that's all fine. Might even be a very nice buying opportunity. If we come down below it once again, I will just maintain an observer's position and nothing more than that. The index that actually had the best technical behavior was the IWM, because we were stressing out yesterday how important it is that the IWM was testing this trend line resistance yesterday, and the break above it would definitely indicate that it's going to be pushing to new highs. But you see that we got a very nice reversal. We tagged the highs once again. We didn't manage to close above this trend line on a daily closing basis. So, if we do see some follow through, that's going to be a nice rejection, which is going to keep the index within a consolidation. FTSE, on the other hand, is just relentless. I mean, from the lows to the all-time highs, within like 30 trading days, it's already extremely overbought. I think that we should be buying dips, but definitely there's no point in buying before we get one. I mean, this has been a parabolic move. Just keep in mind that daily RSI has gone from like low teens to 80 in a very small amount of time, and this is something to note. So definitely the next move should be to the upside, but I think at least a pullback towards 7,580, if not a deeper one towards 7,440, is going to be needed to alleviate the overbought conditions. Obviously, a rebound in the cable, which at some point we should see, is going to help in that direction. Okay, we're definitely seeing dollar pressing on, so dollar getting stronger. Let's have a look at the USD CAD as well. This is what we were seeing. As you see, so far so good. I mean, this area of support has been holding, and that keeps open the possibility of another push to the upside. Only if we do break below here, I think we should be looking lower. Until then, why not another retest of the 130 area? But in general, as I've said multiple times, this is one of the pairs I wouldn't be trading at the moment. I think that it's more or less range bound. It's been choppy. It has been less clear than other currencies, so currency pairs. So I don't see any reason why it would be the preferred instrument to trade. So let's have a look at a few questions. And Andre is going to be with us. Andre, please write to me in text to confirm that you're here, so I can already promote you. Okay, let's see what questions we have. Okay, yes, you are there. Okay, let me find you and promote you already, and I'm going to go through some of the questions. There you are. Okay, I just made you a panelist. I'm gonna mute you and then I'm gonna pass the screen in a few minutes. Okay, let's see what kind of questions we have. That was a question for Mexico says he does see an agreement before May 17. Indian Stock Power Finance Corporation kindly advises it is falling and it was bought at higher prices. Can you give me a ticker for that, please? Okay, Tata Motors. Sure, let's have a look at it. Yeah, definitely a very bearish development here, right? I told you that it remains bearish, you know, as long as we hold below this trend line, and only, you know, a break higher from here would in essence signal something that would look bullish. The fact that we're actually breaking to the downside shows that the market is very, very weak, very weak. Obviously, we can even perhaps redraw this, so this might be, even if you see it like this, so you ignore this week, we are still breaking below it. So this is a very bearish development for this market. As I told you the other day, the only bullish scenario we're seeing is the price, you know, remaining in a slowing descending fashion, which would, in essence, indicate some kind of a descending wedge, and only a break above that would constitute like a bullish development. In this case, best case scenario is probably, if we draw the parallel of this being a descending channel, something like that. Yeah, something like this. But still, as you see, and as I told you the other day, I would not be buying unless or until I saw a break above, you know, the trend line resistance. Until then, it's like trying to catch a falling knife, in my opinion. This is a market that has been, it's almost 2 years now that it's been on the weak side, right? And this is something you need to consider very carefully. And there is no real support area until we get down to 261. So between here and 261, you know, no major support zones. I bet we've even broken below the 78.6% retracement if we draw the fib there. Gold taking out, yeah, gold seems that today might be the day that it's actually going to be breaking down, and you know, that's why you always need confirmation. A few weeks ago, the vast majority of the metals were looking like they were about to break higher. Thankfully, from a technical perspective, we never got those breakouts because could have easily trapped me. I mean, I was looking to be actively long the metals as long as some levels were taking out on a daily closing basis. Thankfully, that never happened. So, you know, I avoided the pain. But yeah, it looks like today, at least one of them, gold, might break lower. Of course, it's early in the day, but, you know, looks like a likely scenario. IWM double top, it's too early to call it a double top. It's too early. I mean, we need to see lower prices to call that a double top. It can happen, it can end up being a double top, but it's too early to call a double top just because we got a one-day reversal. Now, there was a question about Gappy. I went over the Gappy yesterday. Nothing has changed since yesterday, which is the following. I do maintain a bearish bias for the pound yen, but I would want to see this ascending trend line, the blue one, being taken out. So far, this recovery here looks corrective, looks very slow, and you know, lacks momentum. So I do think that there are, you know, high chances that we're going to see a break lower from there. If that happens, I'm going to be turning very bearish, the Gappy. Until then, I think you should wait for confirmation if you don't already have a position. Okay. Okay, question about another stock, PFC. Let's have a look at it, and then I'm going to pass it to Andre. Probably this is not it. Power Finance Corporation. Let me. Yeah, this has to be it. Ooh. Ooh. That is a very nasty chart. That is a very nasty chart. Next area of support at around 70. Okay, already quite mature move to the downside. At some point, it should produce some kind of a rebound, but let me be very clear. There is nothing bullish with this chart. Nothing. So in all honesty, if you're long, I would just be hoping to get a nice rebound from the 70 area to just, get out at, at a better price. This is a very impulsive move to the downside, in all honesty. So I don't have good news for you. Really, this is a very nasty chart and a very impulsive move to the downside. I think that it can easily move down to 68 to 70 before even seeing some kind of rebound. Okay, Andre, can you hear us?
Hello.
Hey,
yes,
mate.
I can. Can you validate my audio?
Yes, absolutely.
Okay.
It works just fine.
Okay.
I just passed you the screen, by the way. You should see it.
Okay. Let me try to. Which one? It's EWM.
The Russell. Yes. Yeah, we're seeing the Russell. Yeah, absolutely.
Russell. Yeah. I take this chart because you mentioned it, and I was checking my previous analysis here on Russell. So I will take this as my introduction here. So actually, Russell is trading at an interesting fib level, and the completion point for two advanced patterns. Actually, it's two sharp patterns. I will not be surprised to see a pullback to the 50% retracement from all this bullish momentum, but obviously, first things first, we have this first pattern here, or the most recent one, or the lower degree one, and that one we target at 50% retracement. Note that RSI is already showing some bullish hidden divergence signs. So if you look left into your RSI, we can see the structure synced with this previous pullback here, this candle here.
So bottom line, Andre, you would consider a pullback from here a buying opportunity?
Eventually, at any moment, I believe they can force the price to print new highs. Obviously,
no, I agree with you. The basic technical analysis picture also shows likely a bullish formation that wants to break to the upside. That's the truth, to be honest. So a major rejection from here is probably less likely than a continuation higher eventually. Just wanted to see if you have a bigger picture idea, from a harmonics standpoint.
In another time frame or another time frame from Russell?
Yeah, if you also think on a higher time frame that we're actually headed to new highs.
Well, I don't have an advanced pattern projection above, but we have a very well established bullish trend. So I have no reasons to believe we are now trading at one top. So we are actually facing. There are people calling a triple top.
In general, I don't believe in.
I don't believe in triple tops. Also,
I mean, they can happen, but statistically, it's a very low probability.
And obviously, I don't take that in consideration in order to trade. So we can validate that as a triple top, but we need a structure breakout as similar as we need on a double top. But let's stay focused on the double top, and we are now trading above the previous closes. So it's a bullish momentum, and there's nothing telling me that the market will reverse from here, or at least it will print a deeper pullback. For that to happen, we need to violate these previous bullish momentum, and it will take time for sure to violate this zone. So, but at least in my opinion, based on the price action and the structure, we need to violate this zone in order to validate that as a eventual deeper pullback. But this is a weekly time frame, so obviously, well, on a daily, I stay with a retest to the previous structure highs. We are now trading. Actually, let me just try to measure.
On my platform, the Russell did make a new high, took out its January high by maybe a point.
Yeah, 1 point.
Yeah. Yeah. So if anyone had stops there, they're gone. So
66, 71. Yeah, few pips, few points here. Let me just measure here. So we have here the 78% fib retracement. Let me try to extend this previous momentum here, and if let me try to find here the 127 extension. Well, yeah, we have one bearish and eventual butterfly that should be printed at 127 extension. So and it can provide us also an interesting pullback at fib levels, for searching for the fib levels. Obviously, I will always take that into consideration. I never know if the market will take this specific harmonic to reverse or to print a stronger reversal, but I assume it's a strong level where I will not be surprised to see the price to searching for previous structure and for the fibs, for fib levels. So answering your question, Steve, yes, we have one eventual bearish butterfly above the most recent structure tops. I'm trying to refresh this browser. I believe my trading view was stuck for a few seconds. Okay, back. No. And this is Russell, and just because you had mentioned it, so I take the advantage to push that chart. So again with dollar Dixie, and we have a very strong example of bullish hidden divergence here with previous structures. So we have the price double bottom the previous structure supports, and we have RSI trading below it, below the previous bottoms, and we have a nice behavior here on RSI, also indicating some bullish trend continuation. But at the same point, we have these bearish. It's a bearish shark printed. Actually, the price has failed to nail the 224. So the price, actually, the pattern.
So we could go to 78.6 now, Andre, 93.70.
I believe so. There's conditions to.
I have a major trend line up there. Yeah.
Okay. Yeah, and that's and we have also. I'm not saying it will keep trending bullish, Dale, but let's see one step after another. So I need to identify the price action once the RSI touches the overbought conditions again. So I believe the market will enter overbought on RSI, so it will print a new high almost for sure, and at that point we eventually it can develop into a, I don't know, you are the expert on trading and identifying the three drives, but it can develop into a bearish divergence on RSI and printing new highs, but you need to identify that structure during the process. But at this moment, I will not be surprised to see obviously new highs, and searching for the next fib level at 78% retracement is my next the next pressure zone. Obviously, take in consideration these levels, because it can act as a resistance, obviously, and force the price to pull back a few points. It's a shark pattern, and those are the levels where I search for those eventual reverses. Actually, we have here the market has reacted well there, very close to the 224 extension, but it has failed to, well, and actually I published that chart inside ForexAnalytix, the eventual heads and shoulders under development here, but it has, in my point of view, it has failed already. We are trading above the close price of the previous stops, so it's not a candle yet. No, Dale, we need a candle close to call it a candle, but I believe, at least in terms of price action, we are not validating these as anymore as an head and shoulder. So at this point, I will not be surprised to see a bullish trend continuation above the 200-minute average, above the previous structure descending trend line, very close to overbought conditions again. So bullish trend continuation and hidden divergence also, bullish hidden divergence, pushing the price to retest the highs. So nothing surprising there. Obviously, euro versus dollar on very similar circumstances here. So we are trading between the 161 and 224 extension for the eventual shark pattern. So I will not be surprised to see a new low searching for the 177, I believe, 177, the 224 extension below the previous structure bottoms. And I have one small trade here in let's say 30 minutes time frame chart. This was actually a reversal head and shoulder. I took this trade and I took advantage of this piece of structure, but we are now trading below, obviously below the next zone of this previous reversal zone, and we are facing again the 224 extension from this previous swing, this last swing that prints the high, and we are now trading a 224 extension or below actually, and threatening the previous support, so which I will not be surprised at all to see the price breaking it. So let's say one step after another, and at this point I need to let the market to breathe a little bit and to try to identify other points for potential reversals. At this moment, a few of my reversal points are failing, so I need to wait and to reformulate again all my ideas. And sometimes when we sit at the wrong sides of the market, we need to stay back and to reformulate our ideas. At this point, I have also on cable. Let me try to check these charts. It was on similar situation as on euro dollar, trading at actually cable has nailed the 224 extension, the completion point for the shark pattern. It has printed a nice reaction from there, but it has failed to violate the previous or the most recent structural resistance, and we are now threatening as euro versus dollar, threatening to close below the previous structural support, which will force the price to print new lows for sure, if the price violates this previous structural support, obviously. So,
well, thank you, Andre.
I have nothing more specifically. Let me just jump into S&P 500.
Can you hear me, Andre? Can you hear me?
Yes, Dale. Can you?
Okay. Thank you. It's interview time.
Okay.
But go ahead, wrap it with the S&Ps. Go ahead.
Yeah, no, just to show you, because I've shared and I pushed that chart among the community on ForexAnalytix. We are trading, actually the price is rejecting the 161.8 extension, but look the strength on RSI, and again, new signs of bullish hidden divergence now. And obviously to invalidate this bullish hidden divergence, the price needs to trade below these lows, and which I will not be surprised, but we are close to oversold conditions, and we are now with bullish hidden divergence for S&P 500 also. And that's all, Dale. Thank you very much again.
Thank you, Andre.
Thank you.
You're very welcome, buddy. Thank you. Nice review. Mike from Rethinking the Dollar, welcome to FACE. I'm going to make you the presenter now, so you'll have control of the screen, like in the show Outer Limits. You're probably too young to remember. And looking forward to hearing your voice as well, Mike. There it is. Oh, so your target audience is the millennials, huh, Mike? Let me unmute you. There you go. Welcome to FACE, Mike. Hello, Mike. There's a drop box up there for your microphone. Still waiting to hear you. You're not muted. So you just have to enable your mic. We see your screen. I'm waiting for the audio. Do you see the audio? Let me do this. Let me make myself the presenter and then hand it back to you and see what happens with your audio. Try it now.
Oh, hello, Dale.
Hi, Mike. Great.
Hi there.
How are you?
I'm doing good.
Nice.
How are you doing this morning?
I'm doing fine. Nice to meet you.
Same here, my friend. Thank you. Thank you for having me on your show.
Yeah, welcome to FACE. So I've been rethinking the dollar, and what I've been rethinking is no one ever seems to have enough of them.
Correct. And no one will ever have enough of them because our cost of living will continue to increase. Therefore, there's no way of keeping pace with that, in my opinion. So
okay,
that's a problem we all face.
So I see that your target audience is millennials. And
ideally, yeah.
Okay. All right. So they're real crypto fanatics. So
yeah.
What do you profess to them? But that doesn't have isn't blockchain.
Isn't blockchain? Good question there. So one of my main thoughts and one of my main philosophies is, first of all, monetary literacy or monetary awareness. And so I'm a somewhat of a silver enthusiast still, because I believe that silver is the most underappreciated and undervalued money source or commodity / money, still in existence. So I tell people, first of all, stick with what got you to this point, and that being most of my audience are from the alternative media world. And so the crypto phase, to me, I'm still somewhat skeptical because it's a new technology, but yet has a lot of promise to it. But yet I don't tell people to really get too involved in that, other than to sticking to what you can physically hold in your hand And for me, that's, you know, my favorite, which is silver. So I don't tell people to
Mike.
chasing digits. Go ahead.
Okay, so we're getting a nice break in silver. Looks like it's, you know, going to challenge $16. Do you just have people kind of be on automatic pilot and just buy a little when they can, every time they can, or do you pick out price levels that are attractive for people to buy physical?
Very good question there. So me personally, I don't really concern myself with the day-to-day price because I'm of the mindset that the actual price in of itself is not what it should be in comparison to all the fiat currency that's floating around. And so I tell people to definitely buy what you can afford, but I'm more of the mindset of just buying fractional silver just to have on hand in anticipation of something down the line occurring to where you might need to use it in the form of barter or in the form of some type of daily transaction. So my motto is just accumulate as much as you can in the form of a savings. And so that's how I would recommend people do, or what I encourage people to do.
So in what form? In bullion? I remember having junk silver bags, and I would get a hernia trying to move it from my house into the hole in the backyard, carrying that thing. So.
Right. Good point there. So it's any method is good, whatever you can carry or whatever you can afford. So I personally, I love the small gram bars and whatnot, and little decorative type coins. And so of course it takes up space, but yet, you know, I encourage people to have real small increments. So the dime bags and whatnot will be ideal, but I still love my rounds as well, and still a big fan of the Silver Eagle. So for me, more so is just how much weight do you have in total, as opposed to what size or how many ounces or whatnot. So just at the end of the day, the more you have, the better, I believe.
How do you know you have a dealer that has integrity and isn't raping you on spreads or misrepresenting the product that you're buying? How do you do due diligence on purchasing your silver?
I have a variety of sources, whether I have some affiliates from my YouTube channel, or I have local coin shops not too far from me, of gentlemen I've been dealing with for quite a while. So I would, you know, tell people to basically scan the market, price the market. There's, you know, a variety of online places you can go. Of course, all have their own different markups or whatnot, and different incentives, whether it be free shipping or whatnot. But yet, at the end of the day, it's good to have one or two good sources online that you can rely upon, as well as getting to know some people in your community, whether it be at a coin shop or something of that nature. So having a variety of places to pick from would probably be best for you.
And Mike, let me ask you this. The gold-silver ratio recently has begun to come in a little bit. So, you know, we're kind of at extremes there. And, you know, I remember seeing it 40-to-1 kind of natural regression to the mean. Tell us why you prefer owning silver over gold. What's the more bullish case for silver? Could it be solar panels in California?
Not necessarily that. When it comes to just me being more bullish on silver, is the idea that for me being someone of Main Street type of means, I'm not a you know, conventional financial Forex type of guy. So I tell people, just similar to myself, it's affordable. And so not too many people can actually purchase the quantity of gold as they can in silver. So I encourage people just to get silver because it's the cheapest. And in the future, I do believe that the ratio will, you know, get back to their normal means of that 15, 16, or some people even say closer to 1-to-1 on the extreme case. So I think you have a much better chance of retaining some purchasing power, as well as probably coming out ahead in the future by acquiring silver. So I typically, as I mentioned, don't really follow the price, but more so just the idea that silver is it's way undervalued in my opinion. So well worth having as much as you can.
All right. So why don't we get to, I went to your website, and you know, you and I have interviewed a few of the same people, like David Morgan and a few other people. So there, oh look, you have a whole store of clothes and everything. Tell us what you think is going to happen, and if you have any kind of time horizon. Do you think this trade war is just more confirmation, whether it happens or not, that you are a believer that the dollar is going to lose its reserve currency status, correct?
I do believe that it technically has already lost its global reserve status. It's just it hasn't been officially revealed to the public eye. And so I'm sure you're aware, as well as a lot of the alternative media world space, they're aware of the fact that more and more nations have bought onto that de-dollarization concept. And so with all the things happening outside of this country here, and the idea that most countries are either using their own currencies or they form some type of bilateral trade agreements or trilateral trade agreements, the Federal Reserve note is not necessarily something that countries still need to have in their reserves. So in that case, that lets me know that they have begun rethinking the dollar already and no longer really depend upon it. And so just a matter of time before it becomes more mainstream and all those Federal Reserve notes has been printed in, as well as the digits come back to this country where they were first created. And then that's when, in my opinion, we'll have some major problems. And some of my prior guests mentioned hyperinflation and all types of things, but there's no time frame to it, but other than just it's underway, in my opinion. And so that's another reason I tell people to make sure you're prepared in multiple ways, whether it be with your, on the financial side, with your living as far as food, and having just being able to sustain yourself if for some reason you can't.
So you talk to people about being a prepper to prepare for this. Doesn't the fact that sanctions, which normally include not being allowed, a country being allowed to operate in the SWIFT system and the banking system, still seems to have a bite? And if there was an alternative, why do people even worry about sanctions and not being able to use that? Why is that still leverage that the U.S. is able to use to negotiate what they want to get out of a country?
Right. Very good point. Very good question there. And so I believe that these sanctions, most recently in the last, say 10 years of me being aware of what's happening with our global economy, it has turned out to be somewhat an appearance of the last push from the Western world to have those nations that are under sanction to cooperate with the old narrative of either you do what I say or we'll cut off your activity financially. And so that has spurred on the move away from the dollar, i.e. the de-dollarization process, with all of these other platforms and methods just being developed. So I believe that the sanctions prior to this time frame, where there were options, were quite effective. But as of now, I don't think they will have the same impact, especially moving forward as all of these other countries begin to work with each other around and outside the dollar. So I believe it's the United States of America's last way of saying, hey, this is our last chance to, actually impose sanctions before they come up with their own methods of doing international trade outside of our dollar Federal Reserve note. So let's give it all we can. Just give it all we got right now. That's what it seems like.
Okay. And is China one of the major power sources behind this new move? Kind of an alliance between Russia and China to de-dollarize, and doesn't China have an alternative to the SWIFT system already, and do they use it?
To my knowledge, with Russia and China over the last, at least ever since the Great Recession, 08-09 time frame, have really, ramped up their cooperative type agreements. And so between them doing business with their own currency, and that I think it's called CHIPS. So I'm not sure the actual acronym itself, but it is the SWIFT system equivalent that they are using themselves. So I do believe that it is active amongst Russia and China, as well as probably all the surrounding nations. And I would like to say that Russia has also developed their own international payment method system-wise. So I believe both of those nations are up and running more so, but it's not really mainstream conversation at this point. But I believe that all the foundational works for a post Bretton Woods type of system is already up and running, just not fully, as I tell some of my viewers, the light switch hasn't been switched on quite yet for them to actually reveal it to the world. But I believe that everything is needed on their end to be able to keep their economies rolling in case of some type of financial hiccup or meltdown, where the SWIFT system, dollar system, the petrodollar system is no longer trusted. So I do believe that those countries are leading the way, of course, and that they are already ready for the after as they call it, the monetary restructuring process as it continues to unfold.
Okay, so the Great Reset and light switch. What's your best guess for what the catalysts may be for such a paradigm shift?
Oh my goodness, that is a very good question there, and that's the thing.
That's all I ask, buddy.
Yeah, there's no. I don't know.
Does that give you time? Does that buy you time to think of?
There's so many things.
Think of an answer, huh?
There's so many things. I couldn't pinpoint one thing other than the fact that it seems like more and more news is coming out nowadays on ways that any domino could fall now, either from the west or east, and it could trigger something that we've never experienced, and of course in my lifetime. So I have no exact answer, put it like that.
Are you ready for another good question?
Yeah, please do. Go ahead.
All right. So accumulate silver.
Mm-hmm.
You like rounds.
Mm-hmm.
Prepare, for, possible supply disruptions when this happens, and, have some food and have some water. Do you think that let's get to crypto a little bit. So
Right.
Do you think that blockchain, which is being embraced by certain governments, although they don't like Bitcoin, to go, and the war on cash that that currently is happening,
Right.
what do you think is a possibility that the U.S. government, like in the 30s, would try and confiscate precious metals from their citizens?
Very good question there. And so actually to reference back to a prior interview I had with David Morgan, and I think that question was posed to him, and I'm of that same mindset that, with 300 and something million citizens here in this country, a very small portion of that actually understand what the importance of precious metals. So it's good to say it'll be hard for the powers that be, our government, to actually pinpoint where and who has what and of that nature. So I don't believe it's something that is possible. And on top of that, if they were to bring the idea of sound money to the forefront in regards to wanting to confiscate it, it would then inform the rest of the public. And then they themselves would wonder, why is the government looking to confiscate gold or silver from this small amount of people? And so they would probably question and wonder, is that something we should have ourselves? And then probably create somewhat of a panic and some type of frenzy of people wanting to go out and acquire it. So it might put them in a very tough spot. So I don't foresee them actually looking to confiscate it, other than just to, as Mr. Morgan hinted at, probably just figuring out a way to tax it down the line to where it'll make it to where you don't want to basically exchange it, because you're going to lose all of that excessive purchasing power that was probably, brought into that through inflation or whatever it might be at that time. So I don't see them confiscating it.
Okay. Do you see the governments embracing crypto so they eliminate cash completely and have a credit debit system so they know everything you do?
I do believe that is in the works. And so that's, as I hinted at earlier, why I'm so skeptical at the whole introduction and the timing of this cryptocurrency technology, because it happened post Great Recession and it seemed to be very timely. And I always question the source of it and the intentions of it. And since we're already in a predominantly digitized dollar environment anyway, cash is already scarce in comparison to the total amount of Federal Reserve digits that's being created. So I do believe that the blockchain will be utilized, and it won't be in the best interest of the public when it is centralized, whether it be through the Federal Reserve or Treasury or whatever entity tries to implement their token or coin for the public to use, just because it's designed to. And I did a video recently how we're coming down a home stretch with, the small amount of cash we have being our last resort of privacy and freedom. And so once, we either go cashless or the purchasing power is inflated away from the dollar, that will be our last little bit of privacy that we will have, because the next issuance of currency or whatever it might be will be blockchain based, and it's going to be centralized, and say bye-bye to your privacy, because at that point, everything will have to go through a medium of exchange in the form of a government or central bank. So it won't be no privacy to your financial dealings. So.
Okay, Mike, you brought up, and you said this, so you said there's a short supply of cash compared to all the digital dollars that are out there because of the fractional reserve system that you know, every dollar out there you could lend 10 and then they could lend 10. So let me, don't you think that there is a place for what is scarce, and the case for a bull market in the dollar initially during this crisis, and cash will also be an important thing for people to have besides silver?
I do agree. I do agree. And so based upon my study, as well as, you know, following other people in this monetary space, I know that especially after the last hiccup we had in our economy, that when a deflation environment type of thing starts, then cash is, of course, very valuable and important at that point. So my thought is that when this restructuring or monetary reset or whatever people tend to call it happens, that will be because of some type of credit freeze. And therefore, any type of physical cash that people can get a hold of will be of use, because you may not be able to use your debit card or your banking card. So it'll be important to have small increments of fiat currency. But then, as a response to the crisis or whatnot, I think monetary policy will kick in. And as it has shown in prior years, it's not in favor of the people. So it's going to be in favor of keeping our economy / banking system afloat. And so at that point, they might issue some form of QE, or as some people say, helicopter money. And then when all those excessive notes come into play, that's when there will be a flood of currency, fiat currency. And that was when people will realize that it's the currency which will become the problem then. And then people, similar to what's happening in Venezuela, as well as other countries, are going to be looking to get rid of it. So paper will serve its purpose, in my opinion, in a very short window of time. But then once policy kicks in, they're going to print and, you know, go above and beyond what's needed. And then that's when we run into problems. So, but yes, I do agree. Short term, it will be very useful.
Okay, and with your website, I see your YouTube channel.
Right.
Do you have a subscription service, or are you doing this just to educate the people and possibly be nominated with President Trump for the Nobel Peace Prize?
No, actually, I do it via YouTube, just to reach out to more people that don't really have any type of financial or monetary background. So as I mentioned myself, not in the currency trading world or Wall Street area, just a simple guy who in his former years played professional sports, and I traveled the world, and I got to see how a lot of people all around the world, especially in one of my favorite places, which is Argentina, how they're experiencing heartache and headache. So yeah. I've been there several times, lived there a while back, and so from that experience there, I came back and started rethinking the dollar, because I realized the similarities in our economies. And so I'm just looking to reach out and to inform whoever will listen.
Yeah, they're going through it again, aren't they, buddy?
Yeah, and it's just getting started. And so
they have pink money and blue money, and we thought this new president, a lot of people thought this new president was there was going to be a great change for Argentina. Were you a major league or a professional baseball player?
And no, I was a basketball player. So I'm a little bit taller, so I played basketball in my younger days. So
yeah, a lot of basketball in Argentina, a lot of great players down there. So did you play in the NBA?
No NBA for me. No, I went to a small college here right outside Michigan, and so had a chance after college to go travel the world for about 7 or 8 years. And so had the privilege of living in various countries, from Argentina, Chile, Uruguay, Mexico, a little bit of Europe. So had a good little career, and in doing so, I had a chance to learn a lot and became very curious on currency. And so I collected all those currencies, and as I visit them still, I realized that the currencies that I had from that time frame are no longer worth anything. And i.e. the Venezuelan bolivar that I have from my time there aren't even in circulation anymore. So got me to really rethinking a lot of things. So just from my prior travels, got me to question a lot of things I was not taught formally in school. So that's how I arrived at this point.
How's your vertical jump still, Mike? Can you get over the rim?
Barely. I was actually in the gym playing around yesterday, and I could barely get above the rim, but I'm no longer.
Well, you know what? Yeah. You may not be able to do that, but this interview was a slam dunk.
Well, thank you, my friend.
And you know, I really commend you on, educating people so that they have something in case what guys like Jim Rickards and all these guys have been saying for years might happen. Yeah. And really think that, people may think that, hard money guys are crazy because they've made all kinds of money in stocks and everything else, and, FANG and you name it, now Bitcoin. So, it is, I think, an important, even mainstream guys say you should have 10% of your portfolio in gold related assets, and basically great to have it on hand. And since you do, and I was wondering if we could all have your address. We could all have your address, Mike. So we can...
No, but actually, speaking of which, if you don't mind, I actually yesterday, or for the next, so I consider this to be RTD, Rethinking the Dollar Monetary Awareness Month. So what I've done is actually, if you're interested, I would love to present the opportunity to your audience. And so I'm looking to give away a 10-ounce SD bullion silver bar via this registration here that I have on my screen here. So if people go to rethinkingthedollar.com/silver, you can enter there, and then at the end of this 30-day period, have the opportunity of winning a 10-ounce bar yourself to add to your collection or add to your portfolio if interested. So
I'm entering.
Okay.
I'm entering, and feel free to use this video on your YouTube channel to promote it. And it was a pleasure meeting you, Mike. I really think that what you're doing is a great service that people probably don't realize now is a great service, but someday will.
Well, thank you, Dale. I appreciate your time. I thank you for inviting me on your program, and hope I was of value to your listeners. Thank you.
Okay, thank you so much, Mike, my trading warrior brother. You know what? Don't wait to buy silver. Buy silver and wait. It's better
to be, as some people say, too early than too late trying to get your hands on some of this precious God-given metal here. So I do agree.
All right, buddy. Thank you so much, Mike, for edifying our community today. That's it, everyone. Turnaround Tuesday is over. Gold took out 300 like I've been talking about for a few weeks. So we'll see what kind of buy set up, and we'll see you tomorrow. Good hunting. Enjoy the rest of your day. King Dollar, King Dollar. Adios, everyone.